Welcome back to the Dividend Diplomats YouTube channel. You've got the fresh new year, new look Bert over there. You're rocking with Lanny. We both have the beards on, guys. It's 2023. And today we're going to do a little something different. We're going to look at three of some of the highest paying dividend stocks in my taxable stock account, just so I can show you three massive positions I've been building up for about a decade plus, how much they pay me, and are they worth buying now? Are these three stocks to possibly buy in 2023? We'll take a look at it all.
So we're going to find out in this video, everybody. But you know the drill. Before we get started, smash that subscribe button. Give this video a thumbs up. Let's talk here for a second. You've helped us grow our channel to 15,000. But let's push it to the max here in 2023. We want to get to what, 25, 30,000, Lanny? We want to crush it this year, and we need your help and your support. But it's not just for us. It's to spread the love about dividend growth investing and reaching financial freedom. So help us spread the message of making your finances better and reaching financial freedom.
Help us help you. Help us help you. All right, guys, we're recording this here actually on New Year's Day. I know we just had a video released on New Year's Day, so check that out if you haven't already. But guys, it's 2023, and I wanted to recap three of the highest dividend income producing stocks, not the highest yielding, not the highest by market value by any means, but three of the highest stocks that pay me dividends each year. These are all based in the US, all pay me quarterly. And guys, they all pay in excess of $500 to me per year. When you break that down, that's at least $125 a quarter each coming from each of these companies.
I think what's cool here is Lanny wrote this article. We can put the link down there too on the blog, about kind of recapping his last 10 years of dividend growth history and what 10 years looking ahead is going to look like. But the reason I'm bringing that up now is not for you to go click the article, although we would appreciate it, stop by the blog too. We do write every once in a while. But the important thing is Lanny has been doing this for over a decade in terms of dividend investing. And what you're going to see what these three stocks are, he's accumulated these three stocks at different points of his investing career too. And you're also going to start seeing the power of dividend growth investing really taking a soar, because if you've owned these for a while, Lanny's for many of these positions has had years of drip, years of dividend increases, and that's what's really helped propel the dividend income for these top three payers to the next level.
In fact, one of the companies I haven't touched since the beginning of my dividend investing journey, guys. One of these just continues to grow and reinvest, and man, it's a beautiful thing. One of the other companies I actually haven't bought in quite a few years. I mean, Bert, would you argue at least 5 years?
Yep. If it's the one I'm thinking of, then yeah, because we both bought it at the same time and haven't really touched it since.
Now, there is one company, though. I did buy one share about a week ago.
You son of a...
Yeah, I did. Bought them at $140 a share. But all right, guys, we're going to reveal here right now. The first stock we are going to dive in and talk about is Lockheed Martin, ticker symbol LMT. So this stock is actually one of the largest companies out of the three here that we're talking about. 127 bill by market cap. What a great defensive company this stock has been. 19 plus years of growing dividends. And Bert, where is their primary source of revenue coming from?
Oh, the government, the Pentagon, defense contracts. And yeah. And from me, I have my Lockheed jet hangar in the backyard. But as we all know, as the government looks at its budgets, it's going to look into the future ways to pay. The one thing it never shrinks is the defense budget. And the fun thing about owning Lockheed Martin, because I bought them too when they fell in 2022 into the mid 300s, is you always see the headline, oh, Lockheed wins a $2 billion contract. Lockheed wins a $8 billion contract. They're just like in an industry that's a cash cow, and one that has a very high moat and not moat is the wrong word to say, a high barrier of entry into to earn those government contracts.
Exactly. And, there's very few competitors fighting for these contracts, others being like General Dynamics, ticker symbol GD. So they earn a very nice, large recurring revenue stream, and there's a high likelihood of them winning a government contract. In 2022, the stock performed up 37%.
Yeah, 2022 was an interesting one here because Lanny put the chart up for the year. I just want to say, like, what was Lockheed's journey through 2022? Because I bought into it. I grabbed, I think, 6 or 7 shares of Lockheed, and it's a pretty sizable position. Lockheed started the year 354, jumped up to 467, back down below 400, and ended in the high 480s. So it was a turbulent year for Lockheed Martin.
Turbulent year. You're able to buy them at some point when they were really down, but you've done very well. Bert, you probably did really well with the shares you own.
I have, yeah. So it's just a testament to show when you buy these great companies that were undervalued at the time, they're up 37% now. So Lanny, I don't think we've actually mentioned it yet. Have you revealed how much dividend income you receive from Lockheed Martin?
All right, the big reveal. I own almost 42 shares of Lockheed. The position actually is over $20,000 in my dividend stock portfolio.
Say that again.
I own 42 shares valued over $20,000. My initial original investment was $2,000 back when I was just a little boy. No, it was, gosh, it has to be 12, 13 years ago when I
Yeah,
bought
you owned this
Lockheed.
before I met you. This is how long you've owned this one.
Yeah, I owned this either in 09 or 2010, one of the 2 years. Gosh, that over a decade ago. And it pays me over $501 in taxable dividends each year. That is passive income hitting the account, but I don't use the cash. I let it drip. So it's been dripping at least a share a year, sometimes more, based on the share price. Right now, it's looking like it could be a full share on the drip. But Bert, looking at these dividend stock metrics, it's actually kind of funny when you think about it. That forward EPS is $26.81. For that first metric, that PE ratio, they're at 18.15. So not overvalued, pretty good value. And you could even say a little undervalued right now for Lockheed Martin.
So let's start going through the other metrics. Their annual dividend is $12. So that gives you a payout ratio of 44.76%. So a perfect dividend payout ratio.
Yeah. And then, guys, they've been growing dividends, like we said earlier, 19 years. The average growth rate is about 9% per year. It's been coming down a little bit, but I'm actually expecting this to even rebound into 2023, especially 2024. I'm thinking we'll see at least that large of an increase going forward. And then that results in a dividend yield that's very favorable at 2.47%, which is about 75 basis points higher than the S&P 500 index. Not a bad stuff.
No, they're huge, $127 billion market cap. So, hey, I mean, great company thing. It's not the cheapest, but it doesn't always have to be. We keep echoing that sentiment here. Not every stock is going to be the cheapest, but it can still be undervalued along the way. And Lockheed does that. I think it's incredible you've amassed a position where you produce $500 of dividend income. That's fantastic. You haven't touched this position in 10 years. So that really shows the impact of a 5-year dividend growth rate of 8.85% and a larger, higher dividend growth reinvestment. Yeah. This is the perfect example of it. I have nothing more to really say to that.
My yield on cost is 25%.
All right. I mean, that says it all. We'll end it there for Lockheed. There's not a better ending point for that. Let's move into your second highest right here.
Number 2. So going into that second dividend stock, Bert and I both, we each own this stock. You know, the position in just my taxable account, not even including my wife's position, because she also owns it, is Target, TGT, that red card, that bullseye, that Target run, circle offers, you name it, it's Target. They've had a bad, rough 2022, down over 35%, trading at $149. But the question is, how much dividend income does it pay me each year? And right now, that is $544 in taxable income coming my way from Target each and every year right now.
It's insane. I mean, Target's just going through some of the motions with retail that all the other retail companies are going through. They have a glut of inventory that they have to liquidate quickly. So a lot of the headwinds they're facing in 2023 are not headwinds they're taking on alone. You're seeing this at Walmart, you're seeing this at Amazon, you're seeing this at all the other major retailers too. But that we're We're buy and hold investors. We buy it for the long haul. So we're able to look past the noise of what's coming in 2023 and try to evaluate the company going forward too, to see if there's more room to buy, or if we're just going to, Lanny, you're just going to keep letting that $544 just reinvest, and get you what about, is that almost 4 shares of Target, 3.5 to 4 shares?
Yeah, between 3 and 4 shares of Target based on current prices, just under $150. I did buy the 1 share at $140 a couple weeks ago, and maybe that last week of December. So added a nice, I don't know, what is it, $4.32 by buying that 1 share. I mean, what a great stock, guys. They're a dividend king, 50 plus years, Bert. Bert, go through the metrics right now for the people out there, for the community.
All right, we're going to rip through these metrics here. Price, $149.04. EPS, $5.53 for the next year. Gives you a price to earnings ratio of 26.95. But let's pause here for 2 seconds, everybody. Something to remember. It's what I said earlier. 2023 is going to be rough for this sector. These are very conservative projections, baking in what's going to be a rough 2023. This is much lower than Target's historical EPS. It's less than what the future is beyond, but for our metrics, we look at the year ahead. So the PE ratio jumps up because earnings per share were slashed for 2023. So that is why it's at a high 26.95.
Exactly. The 2024 projections are far higher than what they're showing for, fiscal year ending in 2023. So you're spot on, Bert. And the question is, Bert, are you liking, Target at the current share price?
I mean, I'm not going to be running to buy it, but it's one that I'm looking at where if it hits below 140 and all that, it's worth nibbling on in the short term, even though the metrics are looking high for the long term. But let's look at the rest of the metrics to fully answer that question. Their annual dividends, $4.32. Payout ratio today is 78%. So above our metric, let's keep going through. Let's get through the rest of them and then finish our analysis. 5-year dividend growth rate, 10.55%. They are that king. They have increased for 50 years. Excellent job, Target. Go down that pasta aisle. And then last but not least, the dividend yield is 2.90, which spiked up after a bad 2022 where they are down 35.74%.
The whole the whole key piece is if you can grab them under $144, you're yielding 3% there. So if you're using 3% as your little barometer, pay attention to the $144 stock price. Now, I don't think dividend growth is going to be great in 2023. I don't think it's going to be that great in 2024 either. I'm talking somewhere between 3 to 6%. I don't know what you think, Bert.
No, I that was going to be the statement I made if you didn't make it, is I would not expect 10.55% dividend growth for an extended period of time.
But over the long run, they usually have a much higher growth rate than our good friends at Walmart, ticker symbol WMT, which is just pitiful. So
yeah, Walmart's playing in the same field as 3M, as Emerson, of the terrible dividend growth companies. So this is, Lanny, enough about Target. Everyone wants to know, who is your number one? Let's go through the number one for Mr. Lanny here.
So the other stock we want to break down on this list, again, there could have been a couple others. One was actually, Canadian Imperial, but I didn't want to talk about them. We wanted to talk about Philip Morris, ticker symbol PM. Yes, the sin stock here. PM, Philip Morris, stock is trading at $101.21. But they don't pay me $500. They don't pay me $550. They actually pay me over $600 a year, $150 a quarter right now. So they're reinvesting right now, adding about 6 shares per year. So when they pay a dividend of over $5, reinvestment alone in a course of a year, 6 shares times $5.08, I'm already producing over 30 extra dollars each year. But we're not even talking about dividend growth. Just pure reinvestment is adding $30 each year.
It's insane. I mean, the nice thing with the tobacco companies, they do offer the higher yield. And what does set Philip Morris apart versus its rivals is that international exposure. I think with the tobacco sector in the US that Altria has been running into is the demand in the United States is down. It continues to go downward. The international community is the one that has the larger market share. So Philip Morris is focused in the market share where you probably want to be for tobacco companies. And it's incredible, Lanny, that you're getting that many shares via drip alone. That's insane. I mean, if you get those 6 shares with their annual dividend of 5, it's insane. Yeah, just $30 extra without even lifting a freaking finger.
And unfortunately, it's a very defensive stock during a recession like we are in right now. So they'll probably continue to perform and do well into 2023, throughout 2023. This could be a good stock to own in 2023. They're up in 2022, almost 6%. In bad times, they do well because people smoke and or drink at least the same amount, if not a little bit more.
Yeah,
Those natty daddies aren't going to drink themselves.
God help us all. So let's run through the metrics here. We'll just knock them out quickly. The PE ratio, their price 101.21, EPS 562, PE ratio 18. Same story as Lockheed, not the cheapest, not the most expensive, still undervalued. Annual dividends 508. Payout ratio is 90%. Let's pump the brakes. We'll come back to talk about the payout ratio until we get through the other metrics. 5-year dividend growth 3.62%. Increase that dividend for 13 years and their yield is 5%. But worth noting, they've increased that dividend every year since the split from Altria and Philip Morris. That's the thing you always have to consider with Philip Morris and Altria. Their history looks funky, but they were increasing the dividend before the split, but they now have increased it every year after too.
Yep, that's a very good part to note. Altria's done the same as well, which is ticker symbol again, MO. They want more money. PM also increasing that dividend every year, up, again, 6% this year. Market cap is over 156 billion. So one of the larger companies and the largest of the 3 of the stocks that we're talking about. So in total, when you do the math, that is over $1,600 that these 3 companies pay me annually. And it's all being reinvested in an average yield of between 3 and 4% with dividend growth rates on average. When you actually add it all up, around 7 to 8% on the growth rate between just these 3 companies. It's like a pretty good image of what my dividend stock portfolio overall looks like.
Yeah, it's fantastic. So thanks for slicing and dicing your portfolio this way. I'll probably have a few other updates too, because it's been fun to look at from your perspective. So we'll probably have a couple more like these just and start doing some more of these updates so you can learn more about our portfolios. Remember already to look in the comment, not the comment, the description below. We link to our full portfolio so you can go to the website, see what stocks we own and throughout all of our portfolios. And also everybody, you know what? Again, subscribe to the channel. Give this video a thumbs up. Let us know in the comment section what you think of Lanny's top 3 and share with us who your top 3 dividend paying stocks are as well. Be curious to see how yours compare to ours. It'll be a lot of fun to see.
Guys, it's 2023. Let's make it happen. Let's get up, get the cash off the sidelines, keep buying undervalued dividend stocks that are on sale. Hey, I may even try to find stocks to get into these 3 positions here and see if they can replace Target or somebody else. We'll see what stocks we end up building here in 2023 or what else you got for the community here.
If you're not with us, you're against us, everybody. Let's go. Let's crush it in 2023.
Guys, that was Bert and Lanny from The Dividend Diplomat, over and out.